Guys, Mike here, head trader at True Trading Group, and January 3rd, our lesson is all about recognizing when a stock is starting to weaken or when a stock is starting to tire and it's running out of momentum. Because there was a trade today that I made that I was able to exit the position well before my intended stop loss because I was recognizing signs that the stock was weakening. SGYP is that stock. I usually don't trade stocks this cheap. This is one of the stocks I call these like a super cheapie. I usually don't trade stocks that are this low priced, but the volume was good enough off the open, and it had a really nice setup. This SGYP is a great example of a good setup that just the breakout just failed, and that's going to happen. Okay, just because a stock has a great setup doesn't mean it has to work out. There will be times that even the best of setups fail, and it's your job to just be able to manage the risk on it, make sure that you're only taking a small loss when that trade does not work out. And with this video and with these lessons, I'm going to go over two specific things with you that are early warning signs that a stock is starting to tire. And the sooner that you recognize these warning signs, the faster you'll be able to exit your position, which means you'll be able to keep your loss smaller. And that's key and that's important. So let's get to the charts. SGYP, guys, had a huge day yesterday. Okay, big, huge day. Okay, this is a great setup because we had the gap up and we broke through yesterday's high, okay, on huge volume. Okay, huge volume. These are all the good things. I'm going to go over the good things with you first, which is why SGYP was even on my radar. It popped up on my scanner, high day, and top gainer scanner. It was up big early in the morning. So I pulled it up and started looking at it, and then I realized that the setup was actually a good one. And when a stock has a big day the day before and you get a break through that previous day's high and the volume that comes in on that break is way bigger than any volume that occurred at any point during the day yesterday, that's an early indication that there's still there could still be momentum in the stock and you could get continuation and a follow through day. Okay, so again, if a stock has a big day the day before, you break through that high right in the morning, okay, very early on huge volume, and the volume is twice as big as any volume that was coming in the day that it had that huge run, that's a sign that there's still momentum. Okay, so for that reason, I now have the stock on my watch list. I'm waiting. It finally puts in the initial morning high. Okay, finally puts in the initial morning high. I then draw out my Fibonacci retracement level. Okay, and what do we start to see? We start to notice that the 38.2 Fibonacci retracement level lines up with VWAP and the trade line. Trade line is the yellow line on my screen. VWAP is the orange line. And you can see we got a trade line VWAP crossover right at the 38.2 Fibonacci level. Right here, guys, is where I got long at 32 cents. Okay, right here is where I got long at a little higher. Okay, right in here is where I got long at 32 cents. All right. And it's because of this support level at 38.2 VWAP and the trade line. The other thing that I want you to notice is the volume during that little pullback, during this little consolidation, is peanuts compared to the volume that came in on that initial opening surge that took us through the prior day's high. That is exactly what you like to see. Huge volume on the way up, low volume during the moment of consolidation or pullback. And that's why once we pulled back in right into this support level and that support level showed its face, I got long at 32 cents. Okay. Now, we're going to get into the part of how do we know the stock is starting to weaken. Okay. Right here, you can see we ended up breaking through the high of the day. This is actually a new high of the day. Okay. This is a brand new high. We broke the high from 34 to 35. Okay. And when we look down here, you can see the volume that came in on that break was not impressive. You want to see when a stock breaks through the high of the day, you want to see strong volume come in on that break. You want to see, preferably, you always want that to be the heaviest volume of the day. Doesn't necessarily have to be the heaviest volume of the day, but I'm saying in a perfect world scenario, you want it to be the heaviest volume of stocks traded so far on the day. Like I bet if we go back, let's actually go back and look at yesterday. So here's a perfect example. So if you look at yesterday's chart, right? Okay, right here when the stock broke through the high of the day, you can see it was accompanied with, at the time, that was the heaviest volume the stock had traded the whole morning. And you got follow through, real continuation from 18 cents all the way up to 29 or 28, sorry. So you got real follow through. And that's because the stock broke through the high of the day with the heaviest volume it's traded the whole day. Okay, that's what you want to see ideally. Now as we zoom back into today, we had this great move in the morning, consolidation, nice pattern develops, support level is clear, 38.2 fib, trade line VWAP, and then you got trade line VWAP crossover. So the support level here is clear. You can see we break through the high, but the volume really didn't ever come in. You got one brief little moment of a slight increase, only about half the volume that was coming in on that push in the morning, and then you can see the volume just very quickly disappeared. That is not what you want to see on the break through the high. Let's go back to the yesterday and compare. That is the kind of volume that you want to see on a break through the high. That is how you can know that a stock is going to give you follow through and give you continuation. Look at the difference. Okay? Look at that. Look at that. Okay, that is how you can know that the stock was starting to tire. Okay, that weak volume on the break through the high was my first indication that the stock was getting tired. However, I still did not sell out of this position yet. I did take some profit off right here at 348. I'll take it to my trade announcements. Zoom this in so you can see a little bit better. All right, you can see long at 32, took some off at 348. And then now we're going to get into the second bearish signal, the second sign that a stock is starting to tire. Okay, and guys, the sooner you recognize these things, the quicker you'll be able to exit a failed breakout before it's too late. Okay, I was able to exit this failed trade. I was able to exit this failed trade so much earlier than my intended stop loss that it saved me big. Okay, it saved me big. And stuff like this can really help save you, and it'll really make a big difference in your P&L at the end of the month. So let's get back to this. So we already got the break through the high of the day on low volume. That's indication number one that the stock is starting to tire, that it's maybe running out of momentum. Indication number two is what I call the bearish signal. If you've been following my channel for a while, I've posted several videos about this. If you're new, cool, listen up. A bearish signal is when the stock breaks through the high of the day and immediately pulls back in to retest the support level that you just bought in front of. Let's say that again. It is a bearish signal when a stock breaks through the high of the day and immediately pulls back in to retest the support level that you just bought in front of. Let's go back to the chart. The whole reason why I bought SGYP was because of this support level at 30 cents that I saw, 38.2 fib, lined up with VWAP and the trade line. So the whole reason I'm long here is because that support level showed its face. We then break the high of the day and immediately pull right back in to do what? Test the support level that we just bought in front of. That, my friends, is a bearish signal. We broke a new high of the day and immediately pulled in to retest that level. That is a bearish signal. And at that point, I said, okay, wait, I now have two indications and two signals that this stock is getting tired. It's running out of momentum. It's time for me to exit this position. And I exited the trade right there at 302 instead of waiting all the way down to my stop loss. Okay, take it back to my trade outs. You can see sold out remaining 302. Okay, so long at 3.2, took some off at 3.48, sold out the rest at 3.02. But my intended stop loss on this trade, when I initially entered this trade right here, my stop loss was going to be just below, okay, the yesterday's high. Okay, my stop loss was going to be down here, but I exited the trade here. And that is a big difference in P&L. Okay, and it's these little things, if you guys can recognize these signals sooner, the earlier you can recognize them, the sooner you can recognize them, the quicker you'll be able to exit this trade and not wait to get stopped out there. So instead of getting stopped out all the way over there at 12:15 in the morning or in the afternoon, I exited this position at 10:15 with a much smaller loss. Guys, you're talking about 302 versus, 275, 28. Do the math, guys. That is a huge percentage difference. And that is the kind of stuff that adds up. So I didn't wait for my stop loss to get triggered. I recognized the signals the stock was showing me that it was weakening, it was tiring, and I exited the position with a small loss before the stock ends up rolling over later in the day. Okay? And that's it. Good lesson on the day, guys. Again, it was a good setup. There was just a failed breakout. It happens, but the more equipped you are to recognize these signals, the better off you'll be able to navigate, a failed breakout and walk away unscathed with a small loss. All right, I'll see you guys in chat tomorrow. Take care.